Hello, and welcome to Virtual Investor Conferences. My name is Cecilia, and on behalf of OTC Markets, we're very pleased you've joined us for our next live presentation from Global Atomic. Please note, you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Tim Campbell, Vice President and Secretary of Global Atomic, which trades on the OTCQX Best Market under the symbol GLATF and on the TSXV under the symbol GLO. Welcome, Tim.
Thank you very much, Cecilia, and hello everybody watching today. Global Atomic, as you know, is active in Niger and Turkey and in uranium and recycling minerals. If we could quickly read that disclaimer, I'm sure we've all seen those before. And on the next slide here, yeah, we're involved in the development of the DASA project in Niger. This is to provide low carbon baseload power. And in Turkey, our long-running zinc recycling operation takes a byproduct of steel manufacture and turns it into a high-grade zinc concentrate, which is sold to smelters around the world, contributing to the circular economy. Thanks. Next. DASA project is the only greenfield uranium project under development today. The reason that's important, and we'll come to it later in the presentation, is that there's quite a supply-demand imbalance that's been brewing in the uranium business for some number of years, but is really coming to a head now with announcements, of new builds, new reactors to be built, and extensions of existing reactors that had been slated to shut down. So there's a bit of a squeeze coming. We're the only group coming in with a brand new project. Next. This is, if you can make out on the right hand side, there is the blow up there of the area within Niger where we're active. What I'd like to do is start at the top. I don't know if your eyes are better than mine. You can see that, but there's two mines at the top, Somer and Cominac. They're uranium mines that have been in production for 40, 50 years. The Cominac mine, which is the second of the two, that just shut down about a year and a half ago after 40 years of mining. It's roughly 60 miles north of us, or 100 kilometers. The important thing there is that we were able to hire the top level staff from that mine. It was an underground uranium mine, and so now we have all our top level staff dealt with and slotted into the operation. So we're ready to go, and we are going right now. We're developing underground, which we'll come to shortly. We have three other projects. They're a little ways behind the DASA project, but nonetheless have deposits that have been delineated through drilling. Potentially going forward here, we could see a situation of being able to mine those deposits and truck them over to the mill at DASA and increase our production. Next. Global Atomic at a glance. So it is the highest grade deposit outside of the Athabasca Basin. That's an area in Canada, which is, of course, well known as the highest grade in the world. We are in the middle of project debt financing, working with the development banks on that. In support of that, we're writing uranium sales contracts with utilities. We just announced our third contract there earlier this week. We're working on an updated mine plan and feasibility study. We'll see what that means to potential returns on the project in a few slides. ESG, ESG is a very important aspect of mining, particularly in a developing country. EP4 and IFC performance standards are the gold standards of ESG. We are working towards those and according to them as we move forward here with the construction and underground work. we have had all of those programs audited by the development banks as part of their due diligence of us as a company and us as a project. All the permits and the operating team are in hand, and we're targeting a commissioning, turning the mine on, turning the mill on in Q1 2025. Currently, we have a feasibility study that was developed in 2021. If you can make out the small left box in red, I mean to say, on the screen there, that's what we call our phase one mine plan. It represents roughly 20% of the deposit only, and that is the basis of all the public disclosure in terms of mine plans at this point in time. Next. So again, that mine plan is built off a mineral resource estimate, which this one dates from 2019. The difference here in the colors, the blue is an indicated, so the green and the blue, they're measured in indicated categories. It just means that that part of the deposit has been drilled off on a tighter drill spacing than, say, the stuff in yellow, which is carried as an inferred category. So it's only the blue that goes into the mine plan. What we did in 2021 and 2022 was we did a 16,000 meter drill program, which resulted in this. Thanks. Which you can see there's a lot more blue in this picture than there was in the one previous. What that means is that when we update our mine plan, which we're currently doing, the amount of material that we will be mining will be considerably more, quite a bit more, than we were carrying in the original phase one. And to give you an idea what that means in numbers, we look at the screen here. Let's key in on the yellow rows there, and the indicated specifically. So using a cutoff grade of 1500 ppm, that's the lowest grade material that we'll be mining. In the July 19 estimate, we had contained uranium there of 73 odd million pounds. Go to the right a little bit there, and you'll see that that's increased to 109 on the basis of the revised estimate in May 2023, the mineral resource estimate, that is. So that's a 50% increase in the mineable material. So what that's going to mean, I'll give you a little bit of hint of that on this slide. If we could start with the chart first. So when we did the original feasibility study, we ran it at a uranium price of $35. And you look at the green column there, you'll see that that's equal to today's price of roughly $70 per pound. What that does to the NPV, before tax, after the IR, etc., it's a significant increase. Now, going back to the top of the slide, the cutoff grade will be similar, but the production life of mine, we can't. We can only give you an estimate, but I'd say it's, we'd be hoping that we would double that number there of the 44 million pounds, maybe call it 90. So that'll be the target anyway. And you can get a gist of that by looking at the previous graph and etc. And that 12-year mine plan is likely to be a little bit more than that, of course. So annual production, I think we'll leave it the same, but with the opportunity to increase it given market dynamics. If they're receptive, we'll do it. Uranium business is so small. It's interesting. There's not that many mines. And as we said off the top, we're the only green field. So that means the only new mine under development today. We run at 4.5 million pounds. We'll be the 10th largest mine in the world in the uranium business. So that's quite significant. Looking at the costs, we are a low-cost mine. $19, like less than $20 a pound out of the ground. That's pretty darn good. We would anticipate that our numbers, when we update the feasibility H1 2024, that they'll be about the same. And the reason for that is we did the original work sort of in the depths of COVID, when the price of everything was was pretty high, and right down to the price of shipping containers and all that stuff to site. Um, we've been able to realize a few efficiencies. I think it'll be largely the same. Again, the feasibility study that's out in the market today represents roughly 20% of our deposit. When we come through with the updated one, I think it'll be roughly a third of the deposit. So this is a very rich, high-grade deposit. It's ready to go, and it's going to make an awful lot of money for quite a bit of time. This is a production profile here. Again, that's the phase one rolling into a phase two. I would say that this is what we would be targeting going forward with our new feasibility study, and probably with additional years on the end of it as well. Next. So we talk about the work we're doing underground. So this is an underground mine. We're ramping underground. We've done roughly 600 meters. So this is essentially an access ramp that take you from surface down to the ore body, which is roughly 70, 80 meters below surface. So what you're looking at there is an air duct running along the top. We've cemented the walls and the floor, getting ready to go into production just as soon as we possibly can. More shots of work happening on site. This is worker accommodation there. Some of the new machinery. This is new machinery, by the way. It's not rehabbed or anything like that. It's brand new. It's name brand, and we're very happy with it. It's important to have good, reliable machinery in the desert. Next, thanks. Significant catalysts. There are quite a few leading to production in 2025. 2023, we've gone through that. We've probably you can take that for yourself and see where we are. We've covered it, I think. 2024 will be good with the updated feasibility study. We'll continue the underground development, construction, exploration. When we talk about exploration, what we're talking about is drilling along at the ends of the currently defined mineral area. This all the drilling that we've done by no means defines all the mineralization that's there. So we'll continue to add to this resource as we go forward, and we'll continue to write new offtake agreements. All of this is in support of getting into a production scenario in 2025. We'll commission the product, commission the plant, and start delivering yellowcake to the utilities. Next, thanks. ESG initiatives since 2008. So it's important to remember that we have been in country since 2008. And over that period of time, we've seen just about everything. We have provided food during droughts, medical supplies, including an ambulance to an area hospital, water wells and related infrastructure. Look, that's something that's easy to do. While there are no settlements immediately proximal to us, when you go out in a say 7 to 10 kilometers from the site, then you start to see little villages. There's sort of 30 to 50 people maybe in a village. There's nothing of any size until you get maybe 50 odd kilometers away. Regardless, water is important, and it's hard to get at. Many of these areas have their own wells, but many don't. So we've done a combination of drilling new wells, fixing up old wells, putting in water tanks, monitoring the water quality, things of that nature. Education and training. Ever since we've started, we've done everything we could. It sort of bleeds into the next bullet there to focus procurement, local, regional, and then national. So whenever we can hire people locally, we do it. It often as not includes education and training, which is something we're very happy to do, and something that the village elders, or the parents, if you will, are very happy for us to do, because like anywhere in the world, it's hard to keep the kids in the rural areas. ESIAs, short form for Environmental Social Impact Assessment. So this is, I guess we're all familiar with those. We've done 3 of them over the time in country. Each one of them's been to a deeper level of consultation, biodiversity study, monitoring, reporting, etc. So by this point in time, we've got a significant database uh, to include baseline studies, which is vital when you're looking to track changes that are associated with our activities on the ground. It's important to know where you started from so that you can track where, as you go forward, what changes are due to you or might be due to something else. Finally, on this slide, the development bank due diligence that we went through over the last 18 months or so, very comprehensive process, which validated our ESG programs and approaches. Thanks, Bob. Next. Uh, so finally on the ESG, so the S in ESG, so environmental, social, and governance. So the social, what it means in a developing country is maintaining social stability, growing the economy on a local, regional, and national basis. The jobs that we bring are good. They're good quality, long run jobs. They're something that are few and far between. And remember, we mentioned earlier in the presentation that the Cominac mine, 100 kilometers up the road, is shut down after 40 years of mining. Well, listen, there were 400 or 500 people working there, and we hope to hire many of those back to work for us. So that's just an example of how the DASA project will contribute to social stability and the growth of the economy in country. We, of course, will be training and the mentorship programs. So those are going on right now as we speak. We actually have a local fellow who is now fully trained up and able to run one of our underground machines for instance. And then we've got a few other fellows who are just behind him, and the program is still in training, but they'll come along. And so that's just step by step we go there, supporting the area agriculture initiatives. There's not a whole lot of rain in this area, as you can probably glean from the pictures, but there is seasonal rain, and it's centered on areas that are known as quarries, which is which would be a dry riverbed. It's a very small, shallow valley, if you will, and which typically runs with water in the rainy season and is typically closer to the water table, so easy for wells to access water. What you get there are seasonal market gardening operations, is what they call them. And so, for instance, when we look to feed the people working on site, which over the course of the year here we've had up to 200 people working, we feed them through a combination of buying fresh produce from the area farmers, and also a catering outfit from a nearby regional center. So this, what we like to do is support that, help to grow it, make water more available, give them a little bit of training in conjunction with Purpose NGOs to see if we can't turn these operations into a 12-month operation, help diversify their diet, and give them more stuff to sell. Not only to us, but to people in neighboring areas. Operational ESG plans. I mean, look, we all look to minimize our carbon emissions. When you work according to Equator Principles and IFC performance standards, implicit there is that you will continue to try to minimize your carbon emissions. So it's not a hollow statement. This is something we're engaged in doing. To wit, solar power and battery storage is something we're going to look to layer in here once we get underway in earnest. Similarly, battery electric and remote mining vehicles, those are the things of the future, and we're looking forward to bringing them on. Bottom left on this slide is that's a water tower that we installed there. So that's just an example of what we've been talking about. In the middle picture there is the president of the company, Steve Roman, with one of our fellows, and the mine opening, the ramp there at the back of the picture. And then, of course, consultation. Consultation is something that we do all the time. It's a regular thing. As I say, there's about a dozen villages, radiating out, starting from about a 7 kilometer circle. And so this is us being in touch with these people on an ongoing basis, going all the way back to 2008. And we've got to know them all very, very well, and they us. And we like to make sure that everybody knows what our plans are and has an opportunity to opine on same. Anybody looking at the uranium business has probably seen a slide like this. I'm going to focus on the top black line there, which is demand going out to 2040. Now, of course, demand is going through the roof, really, on account of what I mentioned off the top, which is we're probably going to double the global reactor fleet over that period of time. If all the announced projects come to fruition. But don't forget, you've got reactor extensions, life extensions. So they were initially licensed for 40 odd years, say, and now they're typically being renewed for a total of 80 years. So this is all adding to demand. Of course, the price of uranium had been very low for a long time, like for about 10 years, up until, say, 2 years ago when it started to show some life. But it's really been the last 2 years that it's really taken off and hit $70 a pound. That's up from maybe 40 2 years ago. But the point there is that there was no incentive for anybody in the uranium exploration business to do much exploring because they couldn't see their way to a profitable project. Well, now they can, but of course you can't turn these things on, just like a light switch. So there is bound to be a squeeze. There is bound to be a further appreciation in the price of uranium, which I think is bound to show up in a higher stock price for uranium miners and explorers. Looking at our Turkish operation, very briefly, this is a picture of the kiln in there. What we do is we process the EAFD, which of course is a byproduct of steel manufacture, convert it into a high-grade zinc concentrate and sell it to smelters around the world. Now, we're not the operator there. Our partner is Befesa Zinc, and they're the world leader. They're the best in the business, they're the biggest in the business, and we're lucky to have them. And it's been a fantastic partnership with Befesa. They've come in some years ago, and in 2019, you'll see there in the middle of the chart you're looking at now. This is showing you production, so throughput, if you will, and then in terms of tons processed and pounds of zinc concentrate. 2019 quite low in comparison, wasn't it? And the reason is that we tore down the old plant and built a new one, and it's state of the art. It's according to Befesa's most advanced plant, and they managed that process. It came in under budget and ahead of schedule, which was unheard of, really. So just a good example of how well they run things. Looking at 2023 and H1, so the first half of 23, look, the numbers are pretty much, they're looking like they did in 2019. The reason for that, of course, is sort of a triple whammy there, I guess. We had the earthquakes in Turkey, which were quite significant, but and all around us, by the way, but not affecting us. So what I mean is that we suffered no structural damage, a little bit of cosmetic, but you couldn't say that for the areas around us, including some of the steel mills. So steel production shut down, and the country was busy in rebuild mode there, really. So we're just starting to see things come back up to normal here a little bit. We anticipate, together with the zinc price seems to be recovering lately as well, that we ought to break even here on the year, I think, and look forward to getting back to more normalized operations moving forward. The board of directors has a ton of experience across the mining business, and of course, all of this this presentation is on our website. I invite you to read it, spend some time with it, and the management team as well has quite a bit of experience in the mining business as well. Then so that's all head office, and then we look at the Niger management team, specifically the HQ in Niamey. That's the capital of Niger. So when we talked about the Cominac mine shutting down, well, the managing director there, Moussa Saleh, is now our managing director. Moussa is an extremely accomplished fellow. He's a mining engineer. He ran that Cominac mine for years. It's, again, I'll just repeat, it's an underground ramp access uranium mine, the same as ours. So there's no learning curve here for him or his senior team, all of whom he brought across. So we have intimate knowledge of whether it's the human resources and the rules and regulations, which are, significant and quite complicated in Niger, to the health and safety and the radiation monitoring and safety. So we have the team we need. They're on site as we speak, and we're working this project forward right now. Tight capital structure. As you can see, the stock price had been a very good performer over the last number of years. It took a hit with the coup, and it seems to be coming back as the situation in Niger appears to be stabilizing. We understand that there is a stated timeline back to democratic elections. There's also efforts by Algeria to lead mediation amongst the wider group of West African states. So I think they're negotiating term to that return to the elections. But I think we're very confident that this is going to happen fairly soon. You can see that management owns quite a bit of the stock, as well as institutional shareholders. Republic of Niger, just at a very high level. This is, of course, a shot of downtown, but currently it's the 7th largest global uranium producer. It was 4th when the Cominac mine was in operation. When we fire up DASA, it'll be 4th again. So everybody in country is looking forward to that, along with us. 50 years they've been in the uranium mining business, so well developed infrastructure, regulations, everything pretty smooth running machine in the normal course of events. Thanks very much for your time. I hope doesn't look like we have a whole lot of time for questions, but if we do, please let's hear them. Bob,
Tim,
I guess that's over to you.
Yeah, if you can hear me.
Yep.
The main questions that have been asked have been about the coup. Particularly, you might want to address how the coup in Niger has affected our project financing negotiations, and whether we're confident that you'll still have what we need. Maybe you can address that.
Okay. Well, in terms of the coup, which is, I guess we're looking at it as a situation that has happened before. It has happened before in Niger. It was about 15 years ago, and nothing changed during the whole course of events. So including back to democratic elections. So, and the timeline for that, I think, was something less than a year. So we anticipate a similar situation unfolding. The development banks would like to see a commitment by the current authorities to a timeline back to elections before they advance funds. I think that's fair to say. But what's also fair to say is that they are keen to move forward with this project. They recognize the pivotal importance that this project plays in the overall Niger economy, and the social stability that I referenced earlier in the piece.
Thanks, Tim. That's pretty well it for time. Somebody did ask whether we had figured out an alternate route to get the materials into Niger, since the Benin border is closed for the current period. Maybe you can just comment on that.
Well, very briefly on that. Okay, very briefly on that. Yes, we have, and we're currently bringing material in ultimately through Burkina Faso. So that's happening right now. Of course, we prefer to revert to what we were doing before because of, everything's well established. So the answer to the question is yes, we have, and those deliveries are happening right now.
Thanks, Tim. That's all the time we have.